Good evening, everyone, and welcome to the NGEN Markets Training session. So, in today's session, meanwhile others are joining in, we will start with our topic for today. So, our topic for today is analysis of custom securities, and we will be taking a look towards three core points here. One of the point is how we can add custom securities datasets in our NGEN Markets terminal for our further analysis. And while doing analysis, we can also take a look towards comparing the performance of these custom securities against dynamic benchmarks and to see how we are creating different sets of parameters based on the dynamicity of the benchmarks and the comparative parameters we have. And the third point is how we can actually add the custom securities in a model portfolio or any such set of portfolio of a client to do further analysis and check on correlation analysis and even the contributions. And then we will head over to the Q&A section. If you have any questions, any queries, you can either write it on the chat box or verbally, and we will try to address them. So I'll just share my screen up again, and you can see here, this is the NGEN Markets terminal we have. Now, currently, if you want to analyze or add in any custom securities in our system, what you can do is you can head over to the My Securities tab in this left side, and you can see it is the eighth tab here given here. And when you click on the My Securities, you can see these are the data sets which can be added. Now, what are custom securities? Custom securities are those data sets which are added by your side. And what you can do is you can then analyze them accordingly in our system by using our proprietary analytics, which is like the rolling analysis and even the performance stats as well. Now, the format for the adding the custom securities data sets are given here. You can see this is the data rows which should be formatted here. You can see this is one data set which is having a date set and even the price series. So if you want to map in any price series, I will show you an example in Excel. We have given an example file, and I also have an example downloaded from my side as well. So when we open the Excel file, I hope this is visible for you. And you can now see that these are the, these are the data sets which are required by NGEN. Now, for an example, if you see here, this is a Microsoft stock, which is a custom securities, which we have actually taken into consideration. And you can copy this stock data sets and then add it into our system. Now, I'll show you an example here. We have not yet added the Vanguard 500 index fund. So we will add these data sets in our entire format here. And when you receive the raw data sets, you might receive it in such formats such as this one. Now, when you see this, this is the data sets of Apple and Apple as a stock.
The size and
And what we
type
consider
when we compare with the what is US is spending. I think what also.
So what we consider in this format here is specifically these are the formats taken into consideration. As you can see, this is the date format which we have taken into consideration and the adjusted close. Now, to add in any data sets, you do not need to add always adjusted close. You can also choose in close as well. Now, in this case, what we are considering here is the date set and the price series, which is the adjusted close. So when we go back to our different data sets of Vanguard, what you can do is you can copy these data sets. So which is furthermore, you can see these are the dates and this is the price series, and you can then copy this and add it into our system. Now let's add it into our system. We have given this point here, which is copy and paste here from Excel. And what you can do is you can paste it here itself. Now here you can name the particular set of a security. Let's say we are adding the VOO, which is Vanguard, right? And what you can do is you can type in the date set like May 2023, right? And once you do that, you can select as equity and validate the input. Once you validate the input, the platform will now take into consideration the entire price series for the data sets which you have currently added into our system. Once you validate it, you can now see that this is the data sets, which is the last previous 5-year data sets which we have used. And the data points are 1300 approximately. And what you can do is you can save it in our system as a customized security, which can be used for further analysis. Now let's save this particular set of Vanguard Index Fund, which is an ETF. And once you save it, what you can do is you can then analyze them accordingly into the system. Now here, when you want to access custom securities, we have given a similar sets of parameters here. For an example, if you want to add in a custom security, this is a plus button where you can add in a custom security, and this particular set of a terminal will show up. But if you want to access the already saved custom securities, there are two ways to do so. One way is to actually search for that custom security, and you can now see that these are the May custom securities which you have currently added. Another way is to actually collapse the entire folders. So what you can do is you can click on this collapse all, And then you can see that we have equity, debt, and other as an asset class chosen. Now, these were the pre-selected asset class chosen by us on a customized basis. And once you click on this equity, you can now see that VOO, which is a Vanguard ETF, which we have already added as a non-standard asset class. Now, what you can effectively do is you can click on it and you can now see that the entire set of analytics is now loaded in our system. Now, what you can do is you can analyze these particular set of custom securities similarly, which you can do for a stock or even for a mutual fund. So let's say, for an example, when you're taking a look towards the performance of a custom security, what you can do is you can effectively map in the performance versus a benchmark. Now, in this case, Nifty 50 as a benchmark is not suitable, as Vanguard is mapping S&P 500, the US stock exchange, equity markets. What you can effectively do is you can go ahead towards the world major country indices, and what you can do is you can search in for S&P 500. And once you search in S&P 500, you can effectively see that Vanguard is effectively mapping that particular set of an index in the system. Now here, what you can effectively do is you can compare the asset versus the benchmark performance, which you can similarly do for any particular set of other securities which you have in our system, like a mutual fund or a stock. Similarly, you can do that for a custom security as well. Now, in our previous session, what we have previously covered was portfolio analytics for the entire set of a mutual fund portfolio. Similarly, you can see the analytics and the statistics where you see in the performance stats is way too similar with custom securities as well. Now here, what you can do is you can see the cumulative return sets, the CAGR, which is since 14th May 2018, which was our start date. And you can also see the annual return and the annual volatility. Now you can compare the annual return versus the benchmark. As you can see, our annual return is actually higher than the benchmark. Similarly, our volatility is way too similar. It is, way too identical. It's just a 0.03 difference between the benchmark. And here, our Sharpe ratio is actually better than the benchmark. The reason behind this is that we are creating a better annual return sets against the benchmark. Hence, our risk-adjusted return with a similar risk, we are taking and considering the better return sets with this particular set of an index fund. And similarly, if you want to map in a risk factor here, now in this case, when you are taking a look towards index funds or ETFs, sometimes the risk factor are way too similar. For an example, if you see the downside risk, it effectively, if you choose in historical value at risk, it shows you that there's a 5% chance to go negative 32.21, whereas in the benchmark, there's a 5% chance to go negative 32.23, right? So it's a way too similar. Just a second. Yeah. So it's a way to similar data sets, which you can see it's that the probability of the return sets are actually very similar. So what you can do is you can effectively map in for 99. Now, the point here is that in the worst case scenario, we might have a lesser loss considering for the fact that the benchmark is having 57.47 and we are having 56.61. Now here on the risk side, we can't see much because the value at risk shows a very similar risk appetite for both the asset, which is our ETF, and the benchmark as well. And similarly for implied, it is a similar thing. The methodology between the historical and implied is just that historical is taken into consideration based on the historical daily return sets, whereas implied is taken into consideration based on the volatility of those historical daily returns. So that's how you can map in and compare the data sets of a custom security with a benchmark. And a very good comparison can be done through the relative stats. Now we have the relative stats versus S&P 500. Now here what you can see is that on a cumulative outperformance basis, we have actually outperformed this benchmark way too much. You can see that it's a consistent outperformance accordingly in the last 5 years. And also you can also check the annual return of a benchmark is 2.70. And that's how it narrates that we are creating a really good alpha against an index. And what you can do is you can effectively see the information ratio and the tracking error as well. Now, what is tracking error? Tracking error is basically to understand that how are we different than the benchmark. The higher the tracking error, the more different we are going to be with the benchmark. Now, in the case of ETFs and index fund, we would like to have a tracking error as low as possible, so that we can now know that the index fund is actually mapping the index and not performing way too differently than particular set of index as well. And here in the information ratio, what you can do is you can see there that information ratio is just a ratio between an alpha, which is an annual return over benchmark, upon the tracking error. So if you are having a good tracking error, or if you are having a less tracking error and a good alpha, you could have a good positive information ratio like 0.50 or 0.10 or such on. And here, similarly, you can see the capture ratios as well. So we are talking about the relative performance here. So within relative performance, we would like to know that if we have actually performed better than the benchmark when the benchmark was positive. So you can now see the up capture ratio, which shows that we are having 104 as a up capture ratio. And here, when you click on this I button, you can see our performance is actually better than the benchmark when the benchmark was up. And it starts from the last 5 years, as we are considering the data sets from the last 5 years. And you can now see that within this last 5 years, we are actually having a better performance against the benchmark on a monthly basis. So for an example, if you're taking into consideration November 2018, you can see the performance is slightly better. Similarly, in the Jan 2019. So whenever there was a positive performance with the benchmark, we positively had a better return sets against the benchmark. Hence, our ratio is actually more than 100. If the up capture ratio was less than 100, our performance would be actually lesser than the benchmark in that particular set of a regard. Similarly, for down capture ratio, it is an inverse of it. What you can effectively do is, if it is lesser than 100, then it is deemed satisfactory as a ratio. What you can do is you can click on this I button, and you can now see that our losses are lesser than the benchmark. It is marginally lesser, but when you're talking about ETFs, it's going to be mapping the index. So you would not see too much of discrepancy between the capture ratios itself. So here you can actually map out the performance versus the asset and the benchmark and see how it has performed in the last 5 years against the benchmark when the benchmark was down. So negatively, if you see that in March 2020, when there was a time of COVID, you can now see that the benchmark had the more drawdown, whereas our asset, which is our ETF, had a lesser drawdown, which is negative 9.54. And similarly, we also have the monthly and the yearly charts as well. So how do we use this monthly and yearly charts? You can use it in the basis of frequency. What you can do is you can effectively map in the number of months in the last 5 years. You can check what has been the up months, what has been the down months, and you can also check that what is the up months. Basically, up months are the positive monthly return sets, which you see here in the graph here. These are the positive return sets. Yeah, please mute yourself, everyone. Thank you. So here what you can see is that you can effectively map in the percentage and see that what are the positive return sets and the negative return sets in a monthly format for that particular set of an index fund. And here what you can see is the average monthly return and the average monthly return when the monthly returns when negative. And you can also map in the volatility of the month and the best months and the worst months as well. So this is how the monthly statistics works out. You can work around with the frequency to see if the entire set of an ETF is actually a positive return generating asset on a monthly data sets or not. Similarly, in the last 5 years, you can also see the statistics here that there was a point in 2022. Basically, it had 25% of the entire ETF in the last 5 years was down, and it is just 1 year down within this 4 to 5 years. And similarly, you can check the average return sets and the volatility with the best and worst. So this is how the performance mapping works out for any custom securities. There are other tabs as well, like the rolling analysis, distributions, and drawdowns. So I'm going to be discussing about few of the tabs here. One of them is definitely a drawdown analysis, because here when you see the drawdowns, you can now see that what has been the losses in the last 5 years and how many days it took to recover for that custom security. Now you can also compare this custom security with as many index and as many other custom securities in our system. I'll show you later down in my session here. But what you can effectively see here is that the loss in the last 5 years was the highest loss was negative 33.99. And the date of that loss was 19th February 2020 to 23rd March 2020, which is effectively a COVID period. And number of days it took to recover for that particular set of a loss was actually 100 days. Now, these are all working periods. And you can also see that there is one set of a loss which is currently recovering. So 51% of that particular set of a drawdown is recovering here in the system. And this is effectively a peak to trough analysis, because when you see the data sets here, for the custom securities which has been added, So the gray area shows you the loss period. So this is the loss period which happened in Jan 2022, and currently it is still recovering, which is 51% recovered. And you can also see other data sets. So other drawdowns are also given here. So we normally map in top 10 drawdowns in our system. Then you can compare this top 10 drawdowns effectively with each other in the custom security analysis. So that's how this works out for the custom security analysis. So for the first part, what I've shown is how you can add in any particular set of a custom security by add a new security here. You can effectively copy and paste the data sets in the system and validate the input and save it as any particular set of security. Now, this can apply for any PMS. If you have the price series of this PMS, this can apply for any AIFs as well, and even the ULIPs. Now, what you need effectively is the price series. And at Engine, what we do is that normally we do calculate the daily data sets. But if you do have monthly data sets, that can also be mapped in our custom securities tabs, because then it will be then converted into the daily data sets. So any particular set of a security you choose, you can effectively see that the custom security can be added in our system and then mapped in with a particular set of a dynamic benchmark which you would like to have. And similarly, if you want to add in this custom securities on a portfolio level, you can effectively do that. So let's load in a portfolio here. Let's make any particular set of a portfolio. We can edit this portfolio here itself. And you can now see we have loaded one of the modified portfolio. Now what you can do is you can effectively add 2 or 3 custom securities in our system. So let's say we would like to add custom securities like the ETF, which we have added in the May, right? So we have 5 to 6 custom securities here. So we can effectively add all of them. And you can now see that I've added Vanguard, then I'm adding MasterCard, and then Apple and JP Morgan. So these are all the custom securities which I had preloaded before the session itself. Then you can now see that these are all 10% allocated and you can rescale them to 100, right? So once you have added these custom securities, what you can do is you can effectively rescale this to 100, and you can effectively add in the particular set of an allocation. So let's say we are adding an allocation of 25% to Vanguard ETF, right? And you can now see that effectively we have 100% allocation. What you can do is you can rescale to 100 and it will proportionally change the allocations accordingly into the system. Now, currently what we do have is some of the Indian mutual funds versus we have the custom securities, which are actually foreign securities in our system. Now, what I'm going to do is I'm going to update this as a new portfolio, as a modified portfolio. And what we can do is we can now run the portfolio analytics similarly with the custom security as a constituent. When you click on this, you can now see that in others, we actually have 51% of allocation in foreign index or a foreign stocks based on the consideration of these custom securities. And you can now see that Vanguard is one of our top exposure in our system. And you can also see the MasterCard, Apple. And when you click on this I button, you can now see that this is a direct holding. Similarly, you can see for the MasterCard as well, this is a direct holding. So we have taken a direct position in MasterCard as our individual portfolio. And similarly, if you want to map in the performance, you can easily do the performance analytics for this particular set of a portfolio itself. So here what you can see is that it considers all the custom security which I have previously added in my system, and then you can map in based on that performance. So here what I've discussed before for the custom security performance can also apply for the portfolio analytics. In our previous session, we had a review that how we can actually consider the analytics. So now for an example, we had the data sets for the last 5 years. So what you can do is you can change this data sets for the last 5 years, and you can now see the performance based on the last 5 years which we have chosen and how our portfolio performs. Now, this portfolio is a hypothetical backtest. It's a backtest, historical backtest of the current holdings which we have right now, which helps us to take decisions based on the securities which we currently have. So this will help us to map out in the next 5 to 10 years, is it really suitable to hold a Vanguard, MasterCard, Apple, or even JP Morgan as a foreign equity in my particular set of a portfolio? Now, for the suitability purpose, what you can effectively do is you can check in the correlations analysis, because in the correlations analysis, you would be able to understand that do we have custom securities which are actually too much correlated with each other or not. So for an example, when you take a look towards this, you can now see that the custom securities like Apple versus MasterCard, or Alphabet versus MasterCard, as these are all tech companies, you can now see the entire set of the correlations are correlated, highly correlated. So in the case of equity to equity, the high correlation can work out between 60 to 70, 0.60, 0.70. And you can now see that the higher the correlation is, the more it is that they are concentrated based on the daily price momentum of these particular set of the securities. Now correlations can work out in either way as well. So for an example, if you work around the correlations versus an index fund, you can now see that Alphabet as Google versus the Vanguard ETF, the index fund which we have, is actually having a high correlation. And that is definitely because S&P 500 does have a high proportion of Alphabet stock. And that's how you can take a look towards the Vanguard versus the Alphabet or any particular set of a custom security in the correlations analysis. Now, one thumb rule here is that when you're taking a look towards the correlations, any number sets which is closer towards zero is actually a low correlation, which helps in diversification. Sometimes you can now see that there's a negative correlations between a bond fund of India, domestic Indian debt category versus a foreign stock, which is Mastercard. So that's how you can actually take a look towards correlations, and the correlations will work out with the start and the end date. As we calculate correlation data sets daily, you can actually choose any start or end date. So for an example, if you have a case study here, like for an example, if you want to choose 2020 to 2022, right? So between these 2 years, what has been the correlation between the stocks and even the custom securities? You can now see the correlations between each other. So for an example, the correlations between Vanguard and JP Morgan or Alphabet is truly high. It's 0.75, right? So that's how the correlation matrix works out. And if you want to check out that how the contributions of these custom securities work out in a portfolio level, you can check that in the contribution analysis. Now, contribution analysis is it shows you on the basis of start and end date. And when you see this start and end date, you can effectively check out that these are the custom securities like Apple, Vanguard, we have Alphabet, we have MasterCard, and then we have JP Morgan. Now, what you can effectively do is you can see the contribution to returns based on the allocations which you have given. Now, in this case, the allocations for the stocks is effectively identical, which we have given, and Apple, which is our holding, which had the best total return sets in the last 5 years. So you can now see that here in the system. Now, this considers from the start date till our current date, but you can change these dates. Let's say if you want to change it from 2019, you can change it and you can keep an end date as the current date sets. And you can now see that this is the contribution towards return, and Apple had the best total return in the entire set of the custom security which we have added. So that's how you can recognize that what are the custom securities which are underperforming. So for an example, JP Morgan as a custom security has not performed pretty well, and its contribution towards the entire set of a portfolio is just 3.11. That's how you can take a look towards it. And you can click on this bar graph to see that which of the stocks or custom securities actually had better allocations to the portfolio and had the better contributions to the portfolio. So here you can click on these bars and you can now see that these are the data sets which we have currently added into the system. So that's how the contribution also works out. So you can work around hand in hand with the correlations and the contributions to see if if the custom securities which we have added in our portfolio analytics is making sense or not, and then you can effectively analyze any particular set of a portfolio. So that's it for the custom security analysis. One important tip here is that what you can do is you can also compare custom securities. There are several ways to do so. One of the way is to add through the portfolio analytics here. So if you already have a custom security, all you need to do is just click on this compare button, and it will then add the funds, the stocks, and even the custom securities directly into the system. And you can now see within the category, some of them are domestic mutual funds, which we have. Other of them you can see are written as custom, which is custom security, which we have added in our own analytics, right? And here you can effectively add more custom securities if you want to compare it with our system. So for an example, if you want to add in, let's say, custom security from here, what you can do is you can search from here. So this is a add portfolios and securities, and you can select the custom security which we have previously added in our custom security, my securities tab. So for an example, I have some of the custom securities like Vanguard, like we have added like Marcellus, PMS, you can add that as well. So These are all the previously added data sets from my side. You can add your own data sets and then compare it in our main list itself. Now, the main list, the compare section is huge. It's a heart of the system. What you can effectively do is I will show you a couple of parameters which will help you to analyze custom securities effectively. Before going ahead, we can also compare all these custom securities with an index. So let's say we are adding S&P 500 for the customization. So here we have, 1 second. Right. So we have added S&P 500. So from the world indices, we can also add a NASDAQ, right? So these are all the indices which we are adding, and we can also add Dow and Jones. So we have added three of the indices here for the comparisons. And once you do the comparison, you can now see that within the drawdowns tab, for an example, that in the last 5 years, when we are considering all these stocks and ETF and these indices, which one had the best recovery, right? So you can now see that for the worst drawdown, the best recovery was by Vanguard, and the second best was by S&P 500. So is it necessary to hold such stocks which are not having that much of a recovery for their worst drawdowns itself? So here the decision making is that should we hold an index or should we hold an individual category of stocks entirely into the system? Now, one of them is Nasdaq is still recovering; it's still ongoing. Alphabet is also ongoing; it's still recovering for the biggest size of the loss. And you can also click on it, and you can now see that which of the loss is actually recovering. So this loss in the last 5 years, which happened, it's negative 44.60. It had a start date of 2021 to 2022, and you can now see the recovery is 50% only. So 50% is yet to be recovered in our entire set of the drawdowns analysis. Similarly, you can do that for the top 5 drawdowns here. So you can check out the size of the drawdowns and the length and the worst drawdowns itself. And you can now see the recovery of those custom securities compared into the system. Now, these drawdowns are very useful. You can change the dates. Let's say you want to check from the last 3 years. You can do that in our system. You can now see that all of them are ongoing as a recovery as of this one worst drawdowns. So that's how it works out for the drawdowns analysis. There's other sets of analysis which can effectively take a look into is risk versus return analysis to see what are the effectively mapped out risk. So risk is basically the standard deviation which we consider, which is annualized, and the return which we consider is the annualized return sets. And you can now consider and compare the return sets of risk and return parameters of the stocks and the index itself. So having a stock as an individual basis is more riskier but better rewarding as itself. But you can now see that there are index which we have added, which we can compare it in our system. Now, having this particular set of a custom security analysis in our compare tab is very useful because you can now compare it with any particular set of our domestic equity as well. So let's say if you want to add and compare Nifty 50 or a Nifty TRI, you can easily do that. Once you add it in our system, you can now check in risk versus return and see that where Nifty 500 stands for. You can now see that compared to all the index which we have against even the index fund, it's better to have a Nifty 500 TRI or Nifty 50 TRI accordingly into the system because it's lesser riskier, but still the better rewarding asset here into the system. So that's how the research can take place when you are taking a look towards the comparisons. And here we also have the point to point analysis, which is a very, very important parameter because you can now check the lump sum investment value as well. So for an example, if you check in 10 lakhs, right? So for 10 lakhs, if you just check in for all these particular set of the securities in the last, let's say last 1 year, which one has been the better performing security based on the lump sum value? So you can now see that it's JP Morgan, Apple, and then you can also see Nifty 500 TRI compared into the system. Similarly, you can see the return sets as well. So if you want to change this lump sum value to absolute or annualized return, you can change them here into the system to see what has been the performance of all these assets compared in the compare section. And even for the absolute value, you can check that. So if you have a bigger date sets like a 2 year or a 3 year period, you can now check the absolute value accordingly into the system. So that's how this works out for the point to point analysis. There are other sets of analysis. We have already covered the correlation. So the correlation is exactly similar with the portfolio analytics, which you have currently discovered before. And there is other sets of analysis like calendar years, which you can explore upon and then check out the custom securities analysis for any particular set of the system. And if you want to create reports, we have given an option to create editable PPT reports, which actually creates all these securities in one single go and presents you a customizable report, which you can then share it with the clients on the reporting purpose. If you want to show the research from your side that how these custom securities have performed in the last 5 years compared against an index, and you can also show the risk versus return chart. And we have also given the performance stats, and we have this tabular format of the comparison report, and even the uh, calendar year return set. So these are all customizable. You can use these reports for the reporting purpose, and it's a very good tool to actually show the clients that what kind of a research you have actually taken into consideration while analyzing this custom security individually and also on a portfolio level. So that's how this works out for this entire session. And we can now open our forum for Q&A. So if you have any questions regarding this topic or any other topics, please let us know on the chat box or verbally, and we will try to address them. So are there any questions?
May I just, yeah, I think there's something on the chat. Okay, so you're asking about the correlation numbers. So basically, when you look at correlation, it looks at, it gives you it tries to explain the relationship between two price series. So this is a matrix which shows the relationship between many different price series. But if you focus on just one number, for example, 0.97 here, that is showing you the correlation between these two items, which you can see highlighted on the left and the top. So now here, what this number really signifies is how the daily price movements correlate to each other. How similar are they? And please note that correlation does not have anything to do with the amount of movement. It is much more to do with the direction. So for example, something that is moving in the same way but gives you double the return as something else, the correlation will still be very high because they're moving in the same way. If you want to look at actual amount of movement, then you have to look at beta. But correlation basically shows you what the movements of these two are like, and you can see some of them are quite high. To kind of understand this a little bit further, Umair, let's just go to the performance chart, the next tab here. So here you can see, some of these. Yeah, let's keep only those two that we were looking at. So here you can see clearly on the chart also that the movement is very, very similar. You can see the daily movements are very similar to each other. Over time, you can see one is doing better than the other. But correlation does not care about that. Correlation cares about the fact that on a relative basis, they're moving very close to each other. And to have the usefulness of looking at correlation is especially if you have a portfolio and you want to be diversified, which means that the items in your portfolio should not be very, very similar to each other. Otherwise, there's no point of having a portfolio. A high correlation is a bad thing, and the correlation output number will always be between 1 and -1. So the closer you are to 1, the higher the correlation. A correlation which starts to go negative means they are moving opposite to each other. So in this case, obviously, we don't have anything like that, but hopefully that explains correlation a little bit. There any other questions, please just let us know in the chat or just unmute and ask, please.
So there is another message called Step Up SIP.
Yeah, so I believe this is a requirement that was given to us a couple of weeks ago. So this is has been entered into the into the list of things we're working on. So we hopefully we'll get back to you soon about when this can be released, but it's definitely under process. Okay, if there isn't anything else, Umair, I think we can. Okay, sorry, there's another question. How to compare foreign versus Indian funds? So our platform only has funds that are available for kind of sale in India, that are available for sale as Indian funds. So of course there are some funds that give you exposure to foreign funds, so you can easily add them in the compare section. So here, Umair, let's try to look for something. See, I can't remember any. What have we got here? I think there are. Yeah, okay. So let's go for that. So let's take that as an example of a foreign fund, and you can then easily put any normal Indian fund. So okay, there's another one maybe. So there's Global Innovation Fund, which obviously invests in foreign stocks, and then you can put an Indian fund. If you want, just for completeness, you can put a few more funds. You can put a couple of Indian stocks in here. If you really want, you can import foreign stock data here as well. For example, another thing you can do is what Umair is doing is adding JP Morgan stock. One more thing you can do if you don't want to just import data, you can also look at the indices that we have, and you can put the S&P 500 or the Dow Jones Index here. That will give you a nice comparison to what foreign stocks are doing versus, let's say, an Indian fund. And if we go to performance chart or something, okay, so we got UK in there as well. So let's, I think the time period is small, but that's fine. But again, even at that time period, you can see, what did well, what didn't. So it should be reasonably straightforward to do this in the compare section. Okay, doesn't seem like there's any more. Umair, we can close for today.
Okay. Thank you so much, everyone, for joining this session. We will come again next week, same time, 4 o'clock Friday, with different sets of topic. And do stay tuned with our videos. We are constantly adding with new releases as well. And you can now check in our YouTube section. So you can search Engine Markets, or either you can effectively click on that icon, and it will show you all the webinars and all the shit we have previously added. And also, if you want to check out our updates, you can check it in our updates tab as well. So you can always follow us on Twitter, because on Twitter we are constantly adding new functionalities. So now you can see that you can now add or manage multiple RT connections yourself from the Engine Markets settings. So these are very important updates which we are currently updating in our system. So I would recommend everyone to follow us on Twitter and stay tuned and updated so that we will be in loop with all of you and we will come up with new functionalities. You can also write us on support@engineresearch.com for any particular set of suggestions or any queries you have for the Engine Markets Terminal. So thank you again, everyone. Have a nice weekend ahead.